So the Dow crossed the unchanged level today 72 times. So right now it's off the lows of the session by far. We were off about 140 at one point. But it's not enough to help the bruising start to the year for the tech sector. So the NASDAQ down close to 14% this year, lost all of its gains since late 2014. So are we about to see the tech bubble burst? And are there still opportunities for investors? Well, with me now is Gerber Kawasaki CEO Ross Gerber and Point View Wealth Management President and Chief Investment Strategist David Dietze. David's here in studio with me. So what do you think about the tech sector, the best performer last year, the weakest? Is it suffering from the broader global economic slowdown? Is it just a victim of the collateral is it collateral damage to that, or is it something specific to technology right now?
Well, I think it's both. I mean, it was the outperformer, certainly the NASDAQ last year, but also there's some macro headwinds that they're facing. First of all, they're some of America's biggest exporters. So to the extent we have concerns about the global economy, that's a big headwind too. And of course, China is their big market. What's going on in China? The enigma wrapped up in the riddle. So I think there's some headwinds generally for the sector.
Ross, your thoughts? You know, everybody's so quick to just use the buzz phrase, tech bubble burst. But is it similar to what happened in 99, 2000? What are we seeing here?
Not even close. I mean, it's nothing like 1990, 2000. I think that's the private technology market. And I think it's important to understand the difference between public tech companies and private tech companies. And the private tech companies have a bubble. It has burst, and we're seeing that. But it is not hurting investors because we don't own those stocks. It's really a VC problem. The public tech companies are doing phenomenally well. We saw some dollar headwinds, but that's actually not happening as much now that the dollar's actually weakened against some of the foreign currencies. And many of these companies have reported great quarters. So we love this opportunity right now. And I think it's a great time for investors to be very selective and begin buying some of these companies.
And David, you have a very specific strategy when it comes to investing in tech, and that is seek yield.
Yeah, absolutely. There are, believe it or not, some great yield plays today in technology. We would mention, for example, Qualcomm, which is now above 4%. Indeed, Seagate now is above 7%. And even IBM is giving you a pretty good yield. So there are some pockets of value, even if you are concerned about value and dividend income.
Compared to the 10-year yield right now, which is at about 174 at last check?
Yeah, you know, people say, why stay in the market? Right now, you've got the S&P 500 on average yielding more than 0.5% more than the 10-year Treasury. Over time, that yield has gone up 5 to 6%. Where are you going to be better off in a couple of years when you're starting with more income?
All right, so Ross, you set us up for some great investment opportunities, and you sent along ahead of time Facebook, Gilead, Apple, Alphabet, some of your preferred tech names right now. So, I mean, are you just seeing a bargain because they've come down so much?
Yeah, I mean...
Is it as simple as that?
Well, first of all, you have Apple. Yeah, it is as simple